Hi everybody, welcome back to my channel. This is Oliver Wiedmaier, founder of Voyage Trading Group. Today we're going to discuss my new indicator, the range tightening indicator. I'll call it RTI for short, and this is found on TradingView. I would like to just quickly summarize what it is. It measures the range of a time period, which is the high and the low of a candle, and it will compare it to the candles in a specific look back time period, and it will compare it to see if it's getting smaller or larger. And what we want to see as breakout traders is the range getting smaller and smaller, which will lead to a potential breakout once the volatility picks back up, and a breakout will occur. And so quickly before we get started, I think it's important to note that this indicator was inspired by the relative measured volatility indicator on TradingView, but this calculates it a little bit different and has a few more features. So without further ado, what I'm going to do is just quickly explain what it is I'm looking for when I trade breakouts. The first thing I'm looking for is an established momentum trend, and it should be 20% over a few days, maybe a few weeks at the very most. And then I want to see during the consolidation period, I want to see narrow ranges and tight closes, and that really sets the stage for a big breakout. And so what this indicator does is it will mark on a chart whenever we see here, whenever there is a spike in volatility, aka a range expansion. And so what we're looking for is we're looking for periods where volatility is very, very, very low, and so that's going to be marked on the indicator as below 20. We have these ranges here to indicate very low volatility, and I have put in a orange dot whenever there's 2 consecutive days of narrowing price ranges, which would be under 20. And so what we're looking for as breakout traders is an established momentum trend, and then that narrowing range and those tight closes. Preferably you want to see that orange dot, but not required. And then you're going to have this big green spike, which will indicate a big range expansion. And so we can see with this particular stock, we have this really nice 4 to 5 days of below 20 on the RTI, and then you have that big range expansion. Now, I know that it doesn't look like it has this big, 8 to 10% breakout, but it's not required. The range expansion can sometimes be very subtle, and so it's very important that when you're using this indicator, you trust that it's doing the calculation to show you that it's having that range expansion. It doesn't need to be 6 or 8 to even 10 times whatever the range was the previous day. It just needs to have that range expansion. And so as you can see here, this is very clearly a breakout, but most traders would pass on this because they want it to be a super big candle, but it's relative, and so the indicator has picked up low volatility and signals a breakout, and you can see that it has worked. Next, we'll look at OKLO, and so what this is a great example of is when you have a delay entry after a big run-up. And so this is sort of like a sell-off into the moving averages, and then you have those 4 days tight closes under that 20, which is why you get these 2 dots here, and then you get that big momentum burst out of this consolidation here. You can see it with the big green spike, and again, this is a subtle range expansion, yet you see it kicks off a really big momentum burst. So even if you bought at the very high of the day, 130%, let's say you used the low of the day, which would have been a pretty wide stop, but 10%. Again, relative, when you have an ADR of 10%, your stop in this instance was just 1 ADR. And then you would have made 13 times on your money. And you can see it's set up again, right? And so it's had this momentum leg, and now it has consolidated. We are getting that low volatility with the orange dot here, and so it is setting up for a big breakout coming out of the consolidation. The next thing we're going to look at is APP. So what I want to note here is the look back period by default is 5, which is really great for kind of shorter bases when you are trading right after a big momentum burst. But if the stock has been trending, like you see APP is really just trading sideways, not sideways rather, it is really surfing the moving averages. You're going to want to use 15 for this instance. And what you see here is the volatility ranges narrows a bit. It has that orange dot. And then again, it has that nice subtle breakout. And you see it has the follow through, and then it continues higher. And so this, again, this is fantastic risk reward. You use, call it 3% for a stop loss. And even if you use the high of the day, 22% gain on that. So this is just important to know that when you select your time period, it would be based on what is happening on the chart. For quicker moves near perhaps a earnings gap or some sort of catalyst, you would drop it down to that 5. And then we'll use RGS as another example for that. So you have this big gap up. It's trading sideways a bit. We are back to 5, right? Because this is a shorter base. This is trading around that big momentum. And so you would drop it down to 5, and you have your 2 days tight. And again, this nice little subtle range expansion breakout. And what's great about this is it doesn't signal to the broad market that this big breakout happened, and so you can get into these positions a little bit more sneaky, because a lot of people would be waiting for it to clear these highs here before they get interested, and then in this particular instance you have some follow through, but you're already in this name and you can sell your partials as it's making these new highs. This is going to be a great example because it's going to really show you how to switch between the different lookbacks. So again, so this would be a shorter base here. It's has this big gap up here, and so it's the RTI has dropped to 0, has the orange dot, not required, but then it has this big breakout. You can see in the green spike here. But if you look over here, you know, we've gotten away. We're, you know, probably 3 weeks away from this big momentum. It's kind of riding the trend. So you could either switch it to 15. So you have the drop to 0 here, and then you have the big breakout here. Or you could even do it to 50. 50 seems to work pretty well as also for some of the longer bases. And so here you would see you would actually, in fact, get the orange dot before that big breakout. So this indicator is really fantastic for different trading styles, different time frames. For me, I like shorter, so I do like to trade around big gap ups or trading delay entries after the gap up, and I think 5 and 15 is really fantastic for that. But again, so what this is going to do is going to help you quickly identify tight price action, and then maybe clue you into when maybe some subtle breakouts happen where you can get into a trade before everybody else. And if you enjoy this, please like the video. If you want to use this indicator, please go on TradingView and add it to your favorites. Also, one last thing, I have started a paid mentorship group on my Discord. I'll add that down in the description. Essentially what I'm doing is I'm taking on people and I'm going to work with them one-on-one, but in a group setting, and we'll review trades. We'll do live Q&A, and what we're really doing is learning together rather than providing alerts and watch lists and not actually help develop traders. This service is going to combine the two. So you'll get a watch list and you'll get alerts, but at the same time, we will go over your system and help develop your system so that you can become an independent trader. So if that's interesting to you, it will be down in the description below. Thanks, everybody. and enjoy.